Welcome back to Crypto Hustle 101. In this video, I'm going to explain the MACD indicator and how it can be used to identify divergence. In today's example, I'm going to be using CAZ USDT on Binance on the 1 hour time frame. Okay, so MACD stands for Moving Average Convergence Divergence. And what it is essentially is a study of two moving averages and their relationship with price over time. Now the MACD indicator is found in the Indicators tab up here. Click it. Do a search, MACD, and there it goes. The MACD's default settings are 12, 26 with a 9 EMA. And you change that by going to the settings right here. Inputs. And that's where the fast length will be 12, slow 26, EMA. Let's close that for now. And let's go ahead and get rid of this for right now. Nice clear space. All right, three things make up the MACD. And those three things are the MACD line, or the fast moving average, the signal line, or the slow moving average, and then there's the histogram, which is this right here, which is the MACD line. I'm going to go ahead and put two EMA moving averages up here on my chart. Go inside of indicators, EMA. One, two. All right, close that out. Now I'm going to go to side of settings and set it so that they match the settings here being 12 and 26. So the first one, we'll set that to 12 for the length. We'll keep that blue to match. Hit OK. And the next one will change to 26 and make that match the orange one. Inputs, length 26. Okay, so this MACD line, or the fast moving average down here in the MACD, what that is the relationship between these two EMAs, the 12 and the 26. So every time the fast moving average crosses down below the slow moving average, like right here, you'll see that this blue line goes below the zero line to negative. And every time it crosses up, let's just find one like right here, you'll see that the blue line goes positive and above the zero line. So let's go ahead and hide that now. Okay, so now that we know what the blue line represents, the orange line, or the signal line, represents a 9-period exponential moving average of the blue line. So the blue line is made by those two EMAs up here, and the orange line is made up of the moving average of the blue line. The last component that makes up the MACD is the histogram right here. And what the histogram is a graphic representation of the relationship between the MACD line and the signal line. So that's why every time this crosses, crosses down, it goes from positive and now flips to negative and it goes red. And every time it crosses up, it goes back to green and positive. So to sum it all up, the MACD line is a relationship between these two moving averages. The signal line is a moving average of the MACD line. And the histogram is a visual representation of the relationship between the MACD line and the signal line. Now I like to use the MACD instead of the actual moving averages. For one, because I don't like to clutter up my screen. And the second reason is because the actual moving average is lagging the actual signals. Like, for example, if you look at here, the asset is actually beginning to go into a downtrend, but it doesn't cross till over here. And if you look in the MACD, it crosses over here. You see it cross there, and you see the histogram go from positive to negative. So I like to get my signal as soon as possible so I can get better entries. And the other thing I use the MACD for is to identify divergence. Now what divergence is when you see price going higher and higher, but in your momentum indicator, you can see it actually going lower and lower. Case in point, you'll see here, price went up to here, and then came down, and then went up to higher heights, but in the MACD, we're going lower. And that lets us know that this asset is not as strong as price action would have you believe. Let's go ahead and identify that so you can better see it. If we take a make that solid. Come down here. Split it up a little bit. So, like I said, price seems strong and the asset seems like it's bullish, but in reality, it's actually coming down. And also, I like to look for M's in market structure. You can also look for M's inside of your momentum indicator like this. You'll see here, M. So like I've said in previous videos, I like to have more than one reason before I enter a long or a short. So let's go ahead and put our fib retracements and see if we're in a good location. Okay. So as you can see, we're above the 786 level, which is above the area where you would want to take a short in, anywhere in here, or above for that matter. The best entry would be the 0.886 up here, but we didn't quite make it there. But if you got in anywhere in here, you're allowed to take a short based off the location. You got momentum divergence. And if I go ahead and put another indicator up here, we're going to go with the Williams R percentage. And if you look here, we're in oversold conditions on the Willie. So that's three reasons right there. You got bearish divergence between the histogram and price action. We're in the short zone on our Fibonacci retracement levels, and oversold conditions in the Willie down here. So that's three different reasons right there. If I wanted to, I could probably add some more. Like I could probably just throw some chaos extensions on here. Well, like so. Zoom out some. Go into settings. Chaos 3.0. Actually, let me go ahead and take this fib retracement off so we see exactly what we're looking at. All right, so we threw them on here, and you can see that it reversed actually on the 4.669 right here to start going to this uptrend. And I just do it in reverse from here down to there. Go ahead and hit our preset. And if you're interested in learning about chaos extensions, I'll put a link to that video somewhere on this screen. All right. Okay, so this is our short zone fib retracement. And as you can see, they darn near line up exactly like this between here and here. So this is like here, price reversed after like slightly going past the 4.669. Price went up to the 2.618, went a little above before starting to come back down. So I'm going to go ahead and end the video right here. Hopefully you guys understand the MACD a little better, and I'll see you next time.